Hello, and welcome to the RICS Client Money and COVID-19 webinar. The objective of this webinar is to look at some of the specific risks and challenges faced by firms as a consequence of COVID-19, with a focus on how these risks relate to holding client money. My name is Chris Cooke, and I'm joined in presenting this webinar by my colleague Waqas Mahmood. We are both finance technical specialists within the RICS Profession Support and Assurance team. Waqas has a particular expertise in client money and how the rules can best be applied in practice. This is a pre-recorded webinar, so we won't have the opportunity to answer your questions live, but we would be delighted to answer any questions or to hear any feedback via the RICS Insight community. We will talk more about the Insight community later in the webinar. I will take you through the background of the economic situation caused by the COVID-19 pandemic, and then move on to look at potential risks to your business. Waqas will then look specifically at client money, the increased risks from COVID-19, the most frequent compliance issues that we see relating to client money, and he will go through the key changes arising from the publication of the RICS Client Money Handling Professional Statement in 2019. A copy of the slides will be available to download from the RICS website and the Insight community. Firstly, some background context. Globally, the economic downturn during the COVID-19 crisis is forecast to be the biggest since the Industrial Revolution. This period includes world wars, the 1918 flu pandemic, a large number of natural disasters, and plenty of other significant global issues and events. This gives us an idea to the extent of the unprecedented nature of the current crisis. The effects of this sudden and massive hit to the economy are going to be felt for a very long time. Repercussions will vary between sectors, but for all of us, the effects of this shock are long-term, and there is no avoiding that. The vaccine rollout has progressed, with 75% of adults in the UK receiving at least one dose by the 1st of June 2021. However, there remains a high level of uncertainty around the immediate future. The UK Office for Budget Responsibility published a report in March 21. This included a forecast that stated that UK GDP fell by 9.9% in 2020, which is the biggest annual decrease since 1709, when a great freeze affected what was then a largely agricultural economy. The same report included a forecast that the UK GDP will increase by 4% in 2021. All of this means that the risk environment faced by RICS member firms is enhanced. Risks seem to be coming from all directions, from the macroeconomy, commercially, operationally, from a business continuity perspective, from a compliance perspective, and from a finance and cash flow perspective. Because of the impact of the virus, many organisations now find themselves in survival mode, facing cash flow challenges, uncertain futures, and changes to their businesses, such as staff working from home. Firms have had to react very quickly to find ways to cope and to continue to operate effectively. There seems little doubt that it is firms who can demonstrate agility in their operations, their strategy, and their finances that stand the best chance of successfully navigating this crisis. RICS has published a wide range of research, insights, and advice on the impact of the COVID-19 pandemic, including the effect on global markets, how it will shape the sectors in which we work, and how firms can best navigate the challenging environment in which we now operate, all of which is on the RICS website, specifically the Coronavirus Hub, the link to which is on this slide. The slide also shows the breadth of areas on which RICS has produced specific COVID-19 professional guidance. The RICS website is regularly updated with information on the current national measures in each of the UK countries, covering the impact of government restrictions on topics relevant to RICS members' interests, such as whether people are allowed to move house or whether construction sites can operate. Another useful source of information and support is the RICS Insight community. The RICS Insight community, which hopefully you've had the chance to engage with, has been designed to create fantastic networking opportunities and to be the main online hub for all built environment professionals. One of the groups in the community is focused on COVID-19. In January, we launched a regulation support and assurance group in the community, which Waqas will cover later in the webinar. Moving on to business risks. This is not intended to be an exhaustive list of all the challenges that firms are currently experiencing, but rather an overview of some of the key areas that we are seeing. The first issue is an enhanced risk of cash flow difficulties and even insolvency. There is no doubt that many firms at this time are struggling with cash flow, and even if they believe they have sufficient funds in the short term, the longer term looks uncertain, and uncertainty is hard enough to plan for at the best of times. Never mind during a crisis, the timing and nature of whose end is so unpredictable. This slide is intended to be practical and helpful in these difficult times, but is no substitute for appropriate expert advice from a suitable finance professional. What can be done to respond to this challenge? Firstly, manage cash outflows. It's imperative that cash is managed as efficiently as possible. That might involve collaborating closely with suppliers and managing their expectations around the timing of payments, contacting landlords and lenders seeking extra time to pay, making sure you're fully up to speed on interest rates and capital repayment schedules in respect of debt and overdraft terms and conditions, forecasting your ability to keep up with payments and stay within your agreed limits, contacting lenders in advance where you think you may have a problem. Secondly, considering the need for professional advice. While such advice is likely to come at a cost, it may nevertheless be a helpful step if it enables you to increase the robustness of your cash flow forecasting, take advantage of assistance you didn't know was available, or to give you a greater insight into your firm's cash flow position. Thirdly, managing cash inflows. Managing cash coming in is just as important as managing cash going out. Keeping in close contact with clients and customers, making sure you're aware of any financial issues they are having, which may inhibit their ability to pay your bills on time. As with all things cash related, if you know about issues before they crystallize, they are more manageable. Depending on the size of your firm, make sure that there is a regular line of communication with all key customers and clarity as to who is responsible for each customer in that respect. This is about more than managing short-term cash difficulty. It is about safeguarding key client relationships for the long term. Make sure you have a robust mechanism for chasing overdue customer debts. Check the terms of your insurance policies in case they cover pandemics or government-enforced closure. Fourthly, accessing government-backed support. In the UK, the government has released a range of support measures for UK businesses during the coronavirus pandemic, and more about those on the next slide. With the prospect of these support measures coming to an end, you also need to plan for what happens next. Fifth, contact your bank or finance providers. Where your firm has loans or mortgages, explore with lenders the potential for repayment holidays and forbearance of interest charges. Where your firm has shareholders, consider speaking to them about the possibility of further injections or loans. And finally, updating cash flow forecasting. If you're a firm that operates continual cash flow forecasting, keep it updated to reflect the rapidly changing circumstances in which you're operating. Make sure it takes account of government support, business rate holidays, grants and loans, for example, and make sure you pay attention to the timings of cash flows in relation to these. Update the forecast for changes to key assumptions relating to lower revenues and delayed customer payments. And if your firm doesn't operate cash flow forecasting, consider starting to do so. Cash flow forecasts don't have to be complicated or embedded within an accounting system. There are plenty of free Excel models that you can find through internet searching, although it's worth making sure that these are reliable. For some firms, cash flow forecasting might need to be reviewed daily. For others, weekly will suffice. This depends on the scale and complexity of your firm's operations and how delicate your cash flow position is. As mentioned on the previous slide, there are many government support measures available to firms during the COVID-19 crisis. The availability of these varies depending on the size of your firm and which country in the UK you are based. The government schemes are set out on the gov.uk website link at the top of this slide. On gov.uk, there is a self-assessment for you to complete that will tell you which schemes are currently applicable to your firm. Some examples of support measures are included on the slide. Because the government response adapts to the changing COVID-19 situation, it is always worth checking gov.uk for updates. Perhaps the most important of these support measures is the Job Retention Scheme, commonly called the Furlough Scheme. This was extended to end on the 30th of September 2021, with a tapered reduction in government support from July 2021. Again, full details of the scheme are available on the gov.uk website. If you do make use of any of these support schemes, it is important to understand and follow the terms and conditions. It's also vital to plan for the end of the support schemes. For example, what you will do in September once the furlough scheme is withdrawn. In addition to the financial support, the government has set up helplines specific to each UK country to provide advice to businesses. Gov.uk also provides a list of potential non-governmental sources of advice. All firms are no doubt having to adapt to a very different way of working at the current time, and the purpose of this slide is to outline some of the challenges that firms that we are speaking to are facing, and some thoughts on how those might be met. In terms of IT infrastructure, firms will have varying abilities and levels of preparedness for enabling staff to work from home while continuing business operations as much as possible. Much of this hinges on a firm's IT infrastructure, where the staff can access emails, shared files, and secure drives from home. Certainly, some of the firms we have spoken to are incurring extra cost in ensuring that individuals have the right IT resources at home to enable this. It's never ideal to be fully reliant on home broadband for business sustainability, but unfortunately that's the climate in which we are currently operating. As regards the fact that much of your firm's IT equipment and data is probably currently at the homes of your staff, make sure that your firm's insurance policies cover these eventualities. Moving on to information sharing and security. There is enhanced risk of information being lost, open to theft, not held as securely as normal, and possibly accessed by staff who wouldn't ordinarily have access to it. It's important to ensure that you review controls around data security and GDPR and ensure that you mitigate the additional risks that you currently face as far as possible. Information sharing and storage is as important as ever, but the risks inherent in these things are also heightened, so ensure that you are fully aware of these and respond as best as you can. Thinking about your staff, managing the welfare and performance of your staff is both just as important as ever and made more difficult by the current climate. Many firms have had increased numbers of staff off sick or with relatives who are sick, staff who are self-isolating, who are in vulnerable or high-risk categories, or who have been furloughed. Staff may also be adapting to working from home for the first time. Maintaining care and support for these staff is crucial to both their welfare and to the continuity of your firm. Thinking about your policies and procedures, where it has been necessary for you to temporarily change some of the ways that your firm operates, change who does what, how certain tasks are completed and recorded, it is important that you ensure there is an awareness and understanding of the changes that have been made and how these changes affect individuals. Equally, your ability to monitor policies and procedures might be compromised by the fact your staff are so dispersed and working from home. So it's important to find ways to monitor this as far as possible, whether through online meetings or other means. Where it is difficult to maintain normal management monitoring of business activity, the risk of fraud and error is heightened, so always bear this in mind. Finally, for this slide, thinking about locum or power of attorney. As part of the RICS advice for SMEs, we've included on our website a pro forma version of a locum agreement and a power of attorney agreement. In addition, there is a link to more detailed business continuity advice that you may find helpful. When setting up locum and power of attorney agreements, make sure your professional indemnity insurance includes clauses that permit these arrangements and continues to provide cover when they are in force. We know that this is a difficult time for all firms and that some are facing very real threats about the ability of their practice to emerge intact from this current period of difficulty. And so, because we know that some firms might be facing insolvency or closure, RICS has developed a suite of advice and guidance for firms in this situation. This can be found on a dedicated page on the RICS website. It's important to note that not all elements of that guidance will be applicable to all firms. It doesn't constitute legal advice, and you should carefully consider whether you need to take advice from a solicitor, accountant, or insolvency practitioner in respect of your particular circumstances. Just a few points I would like to emphasise. It's vital to close properly. Although it's not uncommon for firms to merge and close, COVID-19 is causing firms to consider closing their firms at a speed without a proper plan, whether it's a temporary closure with an intent to reopen or a permanent closure. Even now, handling the closure as well as possible will reduce your risk of exposure to future legal claims or regulatory problems. It will protect clients' rights and improve your chance of regaining those clients in the future should you wish to do so. To help with closing down, it's important to use a closing down checklist. It's a good way to control all activities and actions that need to be taken as part of the process. Details of what the checklist should cover is included on the RSDS advice available on the website. Thinking about other sources of help. It can be a very stressful time closing down your practice, and there will be a lot to think about. RSDS professionals are reminded of the support available to them through the profession's benevolent fund, Lionheart. These support services continue as normal with telephone, online support and advice, access to a legal helpline and professional counselling. Financial support may also be available for those facing extreme hardship in the current circumstances. And as many firms are aware, the professional indemnity insurance market has recently been and remains extremely challenging. In response to the unprecedented market conditions and to try to ease the effect of this market tightening, RICS made amendments to the minimum policy wording for 2020, which came into effect from May 2020. Further updates to that PII minimum wording have subsequently been approved, and the policy wording from April 21 is now available on the RICS website using the link provided. And to ensure the availability of PII, the RICS has a market facility, the Assigned Risks Pool, or ARP. The ARP is open to all UK RICS regulated firms that are unable to obtain PII on the open market. Information on ARP is again available on the link on the slide. RICS members who are retiring or ceasing trading need to maintain PII through a run-off cover for ex-partners, directors, consultants and employees. The need for run-off insurances arises because the PII is underwritten on a claims-made basis. As a general principle, the COVID-19 crisis has the sobering effect of both increasing the opportunities available for fraudsters to target both firms and individuals, and also make more challenging mitigating those risks and safeguarding against the risks. So this slide seeks to point out some advice relating to the principles that fraudsters seem to operate by and some specific emerging fraudulent activities. Firstly, don't be too trusting. Fraudsters love to impersonate the people we trust. They tell us they're from the police or the bank's fraud department, that someone has been trying to access our bank account and we have to move our money to a safe account. Some fraudsters have even been impersonating the World Health Organization. These kinds of fraudsters will normally get in touch through telephone, email, or text message. The vast majority of fraudulent activity starts with the search for data. Whether it's writing to you, phoning you, knocking on your door, sending you a text message, or an email with a link to click on, it's invariably a search for data, passwords, or PIN numbers. So whatever means you are contacted by, whenever you are asked for data about yourself or your firm, consider the possibility that the request might have a fraudulent motivation. Many fraudulent scams seem too good to be true, including special offers that seem unbelievable, normally because that's precisely what they are. Whether it's a get-rich-quick scheme, investment opportunity, fake goods, which might include COVID-specific things like hand gels, face masks, or vaccinations, watch out. Many frauds nowadays are based on fake websites that are almost exact copies of genuine ones and send us links that hook us in. Or they target by telephone, changing the number so it displays something we recognize. Or they text us using the same headers as the bank, so they might link with real messages we've already received. Fraudsters are sophisticated. They psychologically profile their targets and look for ways to make us trust them, and they use that trust to trick us. Listed are examples of fraudulent scams. These include things like fraudsters exploiting coronavirus by offering the chance to move your money to a fake safe account. Banks would never ask you to do this. Fraudsters pretending to be medical professionals, promising coronavirus testing kits or vaccinations for a fee. Texts or emails supposedly from HMRC offering a goodwill payment from the coronavirus fund. This is a scam. In March 2020, the UK government did send a text to the public asking people to stay at home. This was legitimate. However, fraudsters are also impersonating the government, for example, sending texts to people claiming they're being fined for leaving their home more than once in a day. I will now hand you over to Waqas, who will go through the client money specific elements of our webinar.
Thank you, Chris. Yes, I will be talking about the more COVID-19 risks related to client money. As with many areas, this is not intended to be a comprehensive list of all of the ways in which the circumstances of COVID-19 present an increase to the client money risk profile, but rather a pointer towards some of the key challenges. And the first is an elevated risk of fraud and or misappropriation of client funds. A number of factors feed into that. Firstly, you might have key staff absent from work. You might have a reduced ability to maintain normal control mechanisms and segregation of duties in accounting and banking. There may be an increased financial pressure on individuals, presenting a greater temptation and motivation to misappropriate. Normal levels of vigilance around risk might be reduced, vigilance due to concerns and pressures elsewhere within the firm. And there is undoubtedly an increased opportunity for phishing and or other cyber-related fraudulent activities as per our earlier slides. The second area relates to challenges around record keeping. This might be staff working from home without access to printing facilities. It might be logistical challenge of ensuring review and sign off of reconciliations, normally straightforward when staff are in the office together. And of course, one of the reasons why record keeping is so important is that it's so often the firm's defense against dispute, query, and complaints. Thirdly, managing client bank accounts. There might be difficulty in ensuring that staff needing access to online banking can access it at home. There is the risk that when accessing client accounts from home, IT security defenses such as firewalls and antivirus protection might not be as effective, if in use at all. Where payments are made using checks or cash, there are obvious logistical difficulties around handling checks and transporting checkbooks to obtain required signatures. The logistics of obtaining the required authorization for invoices and payments are made more challenging by almost universal home working. Where staff normally process client money transactions are off sick, they may be difficult in proceeding with those transactions. Equally, where staff are furloughed and hence not permitted to carry out any work, there is risk that they may retain access to client money online banking. Finally, the receipt of client funds and other important documentation. The particular challenges might include what happens to the firm's post. Is it being collected from the office or post office? Is it reaching those who need to read or act on it? Where checks relating to client monies are received by post, are they being processed and banked promptly? And so, taking into account those areas of additional complexity, risks and challenge in the management of client monies, how can those risks be navigated? Firstly, we need to work out where the greatest risk of fraud and error is and focus on those areas. When normal staffing levels can't be maintained, we acknowledge the added challenge faced by firms in ensuring that a suitable segregation of duties is in place regarding client money accounting. In such situations, a risk-based approach is encouraged, ensuring that segregation is maintained for functions deemed to be most susceptible to fraud and error. Where possible, an enhanced level of monitoring should be applied by firm principals, senior management during this time of increased risk. We acknowledge that there will be increased risk to the security of client money arising from potential financial hardship likely to be experienced during the COVID-19 pandemic by both firms and individuals. Use this knowledge in your risk assessment to identify the most important controls and checks and establish how you can continue them even if people are working from home or are off sick. Try to make sure that the key duties that need to be segregated to ensure adequate control remain segregated. As already discussed, we know that online fraudsters may try to take advantage of the COVID-19 outbreak. Warn staff to be suspicious of any request to change payee details or make unexpected payments, particularly email requests, even if the email appears to come from a colleague within the firm. Remind them to put a second check in place for all such requests, preferably by calling the payee or client. Be vigilant generally online and be aware before clicking on any coronavirus related links or attachments you receive. Don't be tricked by legitimate looking branding on messages you receive. Cybercriminals will also often use language with a sense of urgency, so be alert. Apply best practice by typing hyperlinks into your web browser rather than clicking on them. Don't enter the credentials on third-party sites unless you are 100% sure you are on the correct site. Moving on to prioritizing record keeping. Where staff responsible for client money accounting are not working remotely from home, the maintenance of adequate and timely record keeping, including reconciliations in relation to monies, is likely to present an additional challenge. Distinguish between essential record keeping and other areas which could be backfilled from a paper trail at a later date. Include instructions to staff relating to all such temporary measures in the firm's policies and procedures documentation to ensure clarity and consistency. Remember that the review and sign-off client account reconciliations can be done electronically and invoices can be approved by email. Maximizing electronic payments and receipts. In an environment where both firms and individuals are required to minimize travel and personal interaction, the handling and banking of cash and checks is increasingly problematic. Consider contacting clients who would normally pay by cash or check to ask them to pay electronically and ensure they have the correct details to do so. Also, contact any suppliers you would normally pay by cash or check to get the information needed to make these payments electronically. Ensure you remove furloughed employees' access to the online banking system until they return to work. As you probably know, most banks now allow the paying in of checks and cash at post offices. Some banks allow checks to be paid in remotely using photographs of the checks. Moving on to the next item, protecting funds in the event of insolvency. It remains as important as ever to protect client money from creditors in the unfortunate event of firm insolvency. In particular, ensuring that the bank operating conditions are confirmed in writing and meet the requirements in the professional statement. Prevent funds in the client money account being used for purposes other than those stipulated or agreed by the client. Maintain records of the payments in and out of the client money account so that clients and the amounts belonging to those clients are able to be immediately identified. And finally, revisiting policies and procedures. Where the circumstances that your firm currently faces mean that significant changes are needed in the way that client funds are managed, ensure that these are documented clearly, communicated to and understood by all staff. Moving on to our next couple of slides, we will talk about the 10 most common client money compliance issues. Firstly, general bank accounts. A RICS regulated firm will hold money in a discrete client bank account. In other words, they hold the monies for one client, or in a general bank account. In other words, they hold the monies for multiple clients. Some firms are not completing a three-way client account reconciliation where client funds are held in a general bank account. Bank reconciliations may be completed by reconciling the cash book or system balance to the bank statement, but the reconciled cash book balance may not be reconciled to the total of the client ledger balances. This is the most common failing in regards to three-way reconciliations. If a full reconciliation is not completed, then a firm may not have accurate and complete accounting records and discrepancies may be missed. This can lead to shortfall in client funds and could also lead to misappropriation of client funds if client ledgers are not being monitored. Moving on to point 2, some firms do not retain evidence that reconciliations have been reviewed and signed off by a principal or an independent senior staff member. The principals of RICS regulated firms are responsible for ensuring that clients' money is correctly accounted for. Principals or an independent senior staff member remote from the day-to-day operation of the client's accounts, for example, the office manager, can sign off the reconciliations if they are not involved in the client accounting, should be involved in the reconciliation process and must actually review the reconciliation and not just sign it off. The reconciliation needs to balance the cash book, client ledger, and bank statement with any discrepancies or adjustments fully explained. What else should you be looking at? Negative balances, old balances held for former clients, suspense or dummy accounts. The timing of the reconciliation is also important. It should be completed within 6 weeks of the last reconciliation. It is important to understand that when you're looking at and not just sign it if the balances agree. In a small firm, the review enables the principal to have confidence that the records are up to date and in good order. Once reviewed, reconciliations should be signed and dated as evidence of approval. The client account bank balance should not be overdrawn, nor should the cash book ever show a negative position. Be particularly mindful of discrete accounts or those that are rarely used, especially if bank charges are applied to those accounts. An overdrawn client ledger balance could indicate that there has been a system error or that payments have been made with insufficient funds. Even accounts with few transactions still need to be reconciled. However, if the individual client ledger balances in the general client account are overdrawn, there is automatically an overall deficit potentially disguising a shortfall in client funds. If discovered, the firm should place funds into the client account pending resolution of the negative balance. Any funds paid into the client account by the firm automatically become client money and must not be withdrawn until the firm receives funds for that specific client. Firms must implement controls to ensure that client ledger balances do not become overdrawn. Moving on to point 4, the principal retains overall responsibility for the security of clients' money. It is their job to ensure that only suitable senior people have access to the client account. A dual authorization procedure is one of the most effective ways and ideally should be the minimum control in place. Approval to execute electronic payments should be restricted to firm principals or a senior manager who is remote from the day-to-day operation of the client account. Those who do not meet these criteria should only be able to authorize withdrawals from the client account with a second signatory. Point 5. There is a common fraud area where emails or invoices are intercepted and the bank details altered so that any funds will be paid to the fraudster. We strongly recommend telephone checks using the mobile number you have registered to confirm that the bank details have changed. In the absence of adequate procedures in place to establish the validity of changes to payee bank details, there is an increased risk of inappropriate and/or fraudulent payments. Point 6 talks about old uncleared reconciling items and differences on the reconciliations. Generally, reconciling items should not be greater than 3 months old, except for checks which may be allowed 6 months to clear. Reconciling payments should be posted back into the client ledger whilst the firm will do their utmost to try and contact the beneficiary. Checks should be cancelled at the bank. There is a precedence for banks cashing checks that are greater than 6 years old, and the firm should get confirmation from the bank in writing that a check has been cancelled. There could be unreconciled receipts on the reconciliation. These should be reviewed. These items which have been receipted but not paid into the bank could indicate that the client ledger balances are not up to date. All of the client bank accounts must include the word client in full. The name of the firm should also be included in the title of the bank account. And where we have a discrete client bank account, the name of the client or property address should also be included. Where banks say they do not have sufficient characters to include all of the required details, the name of the firm or the client can be abbreviated, but the bank cannot abbreviate the word client. You should also ensure that the word client is not misspelt. They would not be acceptable. Moving on to point 8, publishing written client money handling procedures is a statutory requirement for property agents and a requirement for the RICS Client Money Protection Scheme for all other firms from the 1st of January 2020. Clients should be able to understand a firm's rules and policies for handling client money. The written procedures must be provided to all clients, for example in the management agreement, and published on the firm's website. There is guidance available in the professional statement about the content of what the written procedures should include, things like the bank reconciliations, receipt, and payment processing. Point 9, suspense accounts. These can also be referred to as miscellaneous, dummy, or all funds accounts. Essentially, this is any ledger balance which holds funds for multiple or unknown beneficiaries. It is acceptable to have a suspense ledger or a separate bank account to hold old or unidentified client funds. These accounts, however, are often overlooked as part of the reconciliation process. Firms should provide a breakdown of the balance held showing how long each amount has been held in the account. Records of investigations to trace the beneficiary should be retained. If after 3 years all avenues of locating the beneficiary have been exhausted, then the funds must be donated to a registered charity. The firm must obtain a receipt and an indemnity from that charity. And the final point, reconciliations are not being completed on a regular basis. Reconciliations should be completed on a monthly basis and no later than 6 weeks from the date of the previous reconciliation. Even if there are no transactions through the account, for example, interest being credited annually, there still needs to be a reconciliation completed as the balance in the account needs to be reviewed. The professional statement requires these reconciliations to be completed on a quarterly basis. RICS have introduced the professional statement, which has been in force from January 2020. And the next slide talks about some of the key changes as part of the professional statement. Firstly, training. All staff need to receive training on the professional statement. In particular, all client account signatories. The firm should be able to provide evidence of the training, which could be as simple as a training log signed by each member of staff. Secondly, non-exclusive accounts, where the client has signing rights. These can only be opened by the client from the 1st of January 2020. The firm cannot open the account on their client's behalf. Funds held in these accounts are not covered by the Client Money Protection Scheme, and the clients need to be made aware of this. Third, information issued to client. Long lists included in the professional statement. Old requirements where client account title, name and address of bank and interest bearing. Now the firm also need to confirm that the firm has exclusive control over the account, any commissions or fees that will be paid, and how unidentified funds are dealt with. Fourth, donations to charity mentioned in the top 10 findings previously. One of the key requirements of the professional statement is to donate funds to a registered charity after 3 years. Also, there is a requirement to obtain an indemnity and a receipt from that charity. Moving on to payments, as already mentioned previously, but having good payment controls is essential, which is why they have been included in the professional statements. Telephone checks and keeping control of who can access the bank is extremely important. And finally, unidentified funds. There always used to be a question that we would ask and make a note of the answer. However, now it is a requirement of the professional statement to keep records of any investigations to identify the beneficiary. As mentioned earlier by Chris, in the webinar, RICS have established the Insight community, an online hub for networking and communicating with RICS and other built environment professionals. A recent addition launched in January this year is the Global Regulatory Support and Assurance Group, which has a focus on the RICS specialist schemes, including the Client Money Protection Scheme. We would encourage you to sign up to the Insight community if you have not already, and to join this group, which will feature links to relevant guidance and discussions. A link to this webinar will appear on the group in the future. As mentioned at the start of this webinar, please do post any questions or comments on the Insight community, where we will be happy to answer. This slide provides some useful links which you can also make use of. The first link will take you to the RICS response to COVID-19 and how RICS are closely monitoring developments and following official advice on the global COVID-19 outbreak. It will provide information and guidance on how RICS continue to support the profession during this challenging time. The second link is for members who are considering to close their practice. This includes a closing down checklist, as well as useful information around informing clients, retention of records, run-off cover, handling client money, and staff. The third link is to the Client Money Handling Professional Statement, and the fourth is to the Client Money Protection Scheme rules. The penultimate link provides useful insight into good fraud management by putting in place a fraud response plan. Please note this is only available to paying iServe subscribers. The final link on the slide is a guide to professional indemnity insurance in the UK. That brings us to the end of our webinar. We hope that you found it useful. As we've previously said, if you do have any questions, please do not hesitate to contact us via the various avenues.